Hey everyone, and a special welcome if you're a knitwear or home textiles exporter in the Tirupur and Salem cluster. You need to hear this because a truly massive opportunity is knocking on your door. Today, we're going to show you exactly how to unlock it. Let's kick things off with a number that honestly changes everything. $30 billion. Just let that sink in for a second. That's the long-term export growth we're talking about for India's textile trade with the European Union. And this isn't just some pie-in-the-sky forecast. It's the direct result of a brand new, game-changing agreement. And here it is, the India-EU Free Trade Agreement. It's set to go live in early 2026. And for your business, for your t-shirts, your hoodies, your bed sheets, this means zero-duty access. All of a sudden, you're going to be way more competitive than your rivals in places like Bangladesh and Vietnam. The door to bigger orders from Germany, France, and Italy, well, it's about to swing wide open. But here's the catch. With great opportunity comes a pretty sneaky challenge. And this brings us to what I call the growth paradox. You're landing these huge EU orders, which is absolutely fantastic, right? But your cash flow is getting squeezed harder than ever. It's the ultimate ironic twist of success. Let's break down exactly why this happens. Okay, so take a look at this timeline. It's pretty typical. Day 1, you ship your goods out from Chennai port. A few days later, the bill of lading gets uploaded, and the payment clock officially starts ticking. But that clock, well, it runs for 60, maybe even 65 long days before your EU buyer finally pays that invoice. And that creates this huge 60-day gap where your cash is just gone. So here's the real problem, the one that keeps you up at night. All of your working capital is basically floating in a container on the ocean somewhere. So how in the world do you pay for the yarn, the labor, and everything else you need for that next big order? Well, the good news is there's a really powerful solution that was designed for this exact problem. It's all about unlocking the cash that's already yours, the cash that's just trapped inside those unpaid invoices. This solution is called export factoring, and it's pretty simple actually. You basically sell your unpaid export invoice to a financial partner. They're called a factor. And in return, they give you the cash you need right away. You don't have to wait 60 days anymore. So here's how it works in 3 really simple steps. 1, you ship your goods just like you always do. 2, you sell your invoice, let's say it's for 2.5 crore rupees, to a specialist like India Factoring. And 3, within just 1 to 3 days, you get up to 90% of that value, that's 2.25 crores, boom, right in your bank account. The rest comes when your buyer pays up. But wait, there's a really critical detail you absolutely need to know. See, not all factoring is created equal. With what's called recourse factoring, if your buyer fleeks out and doesn't pay, you actually have to pay the money back. No good. But with non-recourse factoring, the factor takes on that risk. For your creditworthy EU buyers, this is the gold standard. It protects your business, period. And this approach, it delivers what I call the triple advantage. It's not just about getting your cash. It's about getting it faster, safer, and, believe it or not, cheaper than you might think. So, first up, let's talk speed. Your traditional bank, they might give you a 60 to 70% advance on your shipment. But look at this chart. Export factoring gets you a much, much higher advance. We're talking 80 to 90%. That is a massive difference in the working capital you have on hand. Second, safety. With non-recourse factoring, you literally have a safety net for your business. If your big EU buyer fails to pay for some commercial reason, guess what? It's not your problem. The risk is transferred to the factor. That gives you incredible peace of mind when you're trying to scale your business. And now that safety is basically supercharged by technology. India Factoring integrates with a platform called MonetaGo, which validates your bill of lading in real time. This is a huge deal for preventing fraud, especially with all that sea freight going to Europe. It gives lenders so much confidence, and that confidence leads directly to, you guessed it, faster approvals and those higher cash advances we were just talking about. And finally, let's talk about savings. Because what if I told you the government will actually help you pay for this? This number, 2.75%, is an interest subvention, basically a discount, offered directly by the government to support MSME exporters just like you. This support comes from something called the Niryat Protsahan Scheme. What it does is significantly lower the total cost of factoring. It makes it one of the most affordable and, frankly, smartest ways to finance your export growth. You gotta remember, this isn't an expense, it's a strategic investment in your cash flow. So let's just put it all together here. I mean, this table makes the choice crystal clear, doesn't it? Compared to traditional bank finance, non-recourse factoring gives you a higher advance rate, it doesn't require extra collateral, it delivers cash in days, not weeks, and it shifts that scary buyer default risk right off your shoulders. It's a complete upgrade in every way. Okay, so the theory is great, but how do you actually put this into practice? How do you go out and seize that EU opportunity? Well, here is your action plan. It's just 4 simple steps to get started. First, get in touch with India Factoring. Second, have some sample invoices and your buyer details ready to go. Third, make sure you mention the MonetaGo integration. That shows you know what you're talking about with modern, secure trade finance. And fourth, and this is important, specifically ask about your eligibility for the Niryat Protsahan subvention to get your costs down. And that really brings us to the final question, doesn't it? With your cash flow gap closed, with your payment risk totally eliminated, and with your funding secure to take on those bigger and bigger orders, what's really stopping you from capturing your share of that $30 billion EU market? The real question is, are you ready to grow? This explainer was based on some fantastic analysis by Benedict F. If you want more deep dives into trade finance strategies that can really help your business take off, you should definitely join his community. You can find it at benedictf.substack.com. Thanks so much for tuning in.